Hello everyone, it is Sterling here from TraderDale.com, and most of you listening to this video, or a lot of you, are going to know me from DayTradingForexLive.com. That's my personal website. So I wanted to do a quick intro on a little bit onto Dale before we get into this webinar. It's only going to be a 2 or 3 minute intro, and then we'll get right into the webinar. But the first thing is, in the 7 years I've been running Day Trading Forex Live, I have only referred to 2 companies in 7 years. One of them was a few years back. Was an actual bank trader that taught a strategy similar to mine. And then Dale, who teaches a strategy that tries to identify essentially the same thing that I'm trying to do at Day Trading Forex Live, but he does it in a completely different manner. So it opens up a lot of other trades that I might not personally get, that somebody could get if they were employing this strategy or both strategies. And so it really is congruent with what I do. I'm definitely not against referring to other services, but as you guys know, most of what's out there is just junk. And so again, I'm not against it. If somebody has a proven profitable strategy that they bring me, I'm happy to refer people to that strategy. In fact, I wish I had 100 strategies that were proven profitable that I could refer people to, because the fact is, not everybody's going to like what I do. Not everybody's going to like what Dale does. And so it's nice to have other options. But unfortunately, there's just not a lot out there. And so what is this webinar all about? What has Dale produced as far as strategy goes, as far as results go? And I wanted to just cover the latest statistics that he had. This was the June statistics. It's July right now. And so through June, he had a total of 44 trades, 33 winners, 11 losers, which made for a 72.2% winning ratio, win-loss ratio during that month. This is on just 4 pairs, and that produced a total of 198 pips profit. Now, you might say, well, 198 pips, anybody can write a number in, anybody can write in a winning percentage. What you got to understand about this, guys, is that the levels he trades from are pre-selected. They're pre-selected and advanced, and then because he takes the entry on literally the first touch of that level, you know for certain whether it was an entry or not, because there's no discretion behind did it touch that level or not. Could you have some differences as far as a broker difference between one broker or another? Yes, of course you could. And at the end of the day, over the course of time, I'm a firm believer that broker difference tends to even out regardless of strategy that you're trading, because for the vast majority of the time, it's maybe off by half a pip or a pip in between brokers. It's not a great deal of difference. So it's a very profitable strategy, and that's really what put me over the edge to where I was willing to work with Dale and refer people to Dale, because it was a proven profitable strategy that I thought was a very helpful strategy for those looking to kind of expand their trading, looking for a different entry technique and trying to identify what smart money is doing. And that's what this webinar is all about, how he uses market profile to produce these type of results and how you can start doing so as well. So I'd encourage you to watch the whole webinar, as Dale really put together a lot of information that was very helpful, and I hope you guys enjoy it. I do want to forewarn you that I missed maybe the first 20 seconds, 30 seconds of the webinar where he's just kind of covering what he was going to cover in the webinar, just some bullet points. So there's nothing as far as context goes, as far as material goes, that I missed, but it will kind of jump into the webinar without your typical kind of clean start where he's introducing himself. So just be aware of that, but nothing as far as content was missed. So with that being said, let's go ahead and get into the webinar. Hope you guys enjoy it.
Price action. This will be one of the most comprehensive parts of the webinar. And after we cover that, I'll show you the application on real trade examples, and I will also give you my current trading levels with a brief commentary. In the end of my webinar, I will tell you very quickly about my trading course, and there will also be some time for your questions. Of course, you can ask those during the webinar or in the end of the webinar in the QA section. So let's get to it. As I said, my name is Dale. I'm from Europe. As far as my formal expertise is concerned, I have a university degree in finance. I'm a certified portfolio manager, investment manager, and I also have a financial derivatives certification. In the past, I worked as a market analyst in a broker company, but I quit and started trading on my own. I've been trading around since 2007, 2008, and I've been trading stocks, investment certificates, I've been also trading forex using automated systems, and for some years now, I think it's about 6 or 7 years, I've been trading forex manually. In this webinar, in the following sections, I'm going to show you how I do that. As I said, I'm trading forex. What I like about it is the liquidity, and also that you can trade all around the clock. I trade intraday trades with 4 forex pairs. I trade euro dollar, Australian dollar, US dollar, Canadian dollar, and US dollar Japanese yen. The reason is that those are major forex pairs with a lot of liquidity and the tightest spreads. I don't trade the pound because it doesn't suit me very much. If the pound calms down a bit and stop doing those crazy moves like it's been doing this whole year, I may consider trading the pound again, but right now I'm not trading it. I trade with 10 pip profit target and 12 pips stop loss. This is what works for me and what suits me best. Of course, this is just my preference. A lot of my members use, for example, 20 pip profit target and 20 pip stop loss, or another different method that suits them best. For example, in the summer, I think that quite a lot of them uses 10 pip profit target and 20 pip stop loss. The tighter profit target is because of the low volatility. Generally speaking, I have on average 1 or 2 intraday trades per day. But for example, in June, there were over 40 intraday trades. I think it was 42 or 44 intraday trades, which makes more than 2 trades per day. My long-term winning ratio is around 70%. In June, it was around 72%. And so far in July, it's around 80%. It's very good for summer months, I would say. Apart from intraday trades, I also take swing trades. I trade 15 forex pairs with average 5 to 10 trades per month. Now, I don't use any regular indicators like EMA or RCI, Bollinger Bands, or a CCI indicator in my trading. And the reason for that is that I don't think that those really work. I think that those don't really give you any edge, any useful information. Now, you have may seen this screenshot, this one, in some of Sterling videos, and what it shows is that 2/3 of all forex volumes are traded by 10 biggest financial institutions. Those 10 financial institutions. Those institutions move and manipulate the price. If you want to be profitable, you need to know what those guys are doing. If you don't know that, you are trading blindly, and in the end, you will most likely end up losing money. So if you are trading forex, you need to know what the majority of the banks and institutions are doing. But I think that you know that already from Sterling. Now, our edge here is that we can reveal activity of those institutions by watching their volumes. Institutions will never be able to hide them, and therefore we'll always have this edge. No matter how the markets change, we'll always be able to track them because of the volumes. So what I think is that volumes are the most valuable information you can get from the market. If you combine volumes with simple price action, you will have a very robust and a very profitable trading strategy. So now let's have a look how exactly to track volumes of those institutions. For that, I use Market Profile, which is my favorite tool to analyze the market. This is what it looks like, and it's a volume histogram that shows volume at price. So this is volume at price. The most common indicators, the most common volume indicators show volume at time. So they look like that. You probably know some of these. But I think that volume at price gives you much more information than volume at time. I like to use daily profiles. Those are quite common. Daily profile means that for every day there is one profile. So for example, in this picture there are 3 days. This is the first day, second day, and this is the third day. This market profile is the profile of the first day, this profile is the profile for the second day, and this profile is the profile of the third day. I use 30 minutes chart, but the market profile is not time frame dependent. So it doesn't matter if you look at 5-minute chart or 1-hour chart. The daily profile will always look the same. It will always be one profile for one day. And as I said earlier, through volumes, market profile shows positions of big institutions. Now I will show you the 3 most significant pieces of information that market profile tells us. Those 3 things are also fundamentals that I use for my trading setups. So the most significant things to watch at the market profile, at least according to me, are volume accumulation, aggressive initiation, or as some market profile users call it, a single print, and strong rejection. Let's have a look at them one by one now. So one of the first things I do when I open a chart is that I look for places where heavy volumes were accumulated. It takes time for big institutions to build up their positions, so they can't enter the market the way we do. They can't just click the mouse and be in the trade. They have enormous positions which they need to place in the market without moving the price too much. They do it slowly and most of the time in sideways price action. You can see that in a picture. This is a sideways price action in which very heavy volumes were accumulated. Those are the volumes. And in this accumulation, big players are getting ready for a vertical movement, like in the picture. This is a vertical movement, very aggressive movement. And the most significant area in volume accumulation is point of control. Point of control is the place where the most volumes were accumulated, were placed in the market. In this case, point of control is right there. This is the point of control. This is the point of control in this area. Let me show you the trading setup number 1. This setup is based on volume accumulation. It's based on this information. And in this setup, I want to see a significant volume accumulation, for example, right like there. And after that, I want to see a strong either buying or selling activity. This gives me information that those volumes that were accumulated in this area are either volumes of strong buyers or strong sellers. So in this case, those volumes were volumes of strong buyers. And with this information, I wait at this price, at the price where the heaviest volumes were accumulated, at the point of control. And when the price makes a pullback to this area, I go long from there. Now the reason behind this strategy is that those strong buyers will be defending their buying positions. When the price comes back to this area, those buyers will be defending their buying positions. They do it by aggressively buying and pushing the price higher. If there aren't any strong buyers left, those sellers that are selling right now, right there, they don't know that the buyers have left the market. So those sellers will be afraid of those strong buyers right there, and they will abandon their selling positions. So they will be quitting their selling positions rather than risk a battle with those strong buyers. So this again makes the price go upwards. So this is the reasoning behind the setup number 1, the volume accumulation setup. In this picture, you can see 3 daily profiles along with 3-day price action in 30-minute chart. As you can see, I marked all significant volume accumulation areas in this chart. The first significant volume accumulation area is this. You can see that those heavy volumes were accumulated in this sideways price action, Another very significant volume accumulation area is this one. You can see that in this sideways price action, those volumes and those heavy volumes were accumulated. Another volume accumulation area is right there. Again, those volumes were accumulated in this sideways price action, and in the next volume accumulation area, those volumes and those heavy volumes were accumulated in this very long sideways price action. So this is the first significant information I look for when analyzing a chart. If I wanted to trade my first trading setup I just shown you, there will be two very nice opportunities. The first would be short from this area. The reason is that this volume accumulation right there in this sideways price action, then there was a strong selling activity indicating that those volumes were most likely volumes of strong sellers. At the highest point of this volume accumulation, there is my short level, so I would just wait for a pullback to this area and go short from there. There is also one pretty strong long level in this picture, and it's also based on the first setup, on the volume accumulation setup, and you can see that right there in this sideways price action those heavy volumes were accumulated. After this accumulation there was a strong buying activity indicating that those volumes were probably volumes of strong buyers. So in this case I would wait for price to come back to this area and go long from there. I hope this is clear enough, that the setup number one is clear enough. Now let's have a look at the second significant piece of information that I look for in the markets. The second piece of information is aggressive initiation, or as some market profile users call it, a single print. You can see such moves mostly after volume accumulation, as I said earlier. And such a move means that one side of the market is much more aggressive than the other. In this case, the buyers are more aggressive than the sellers. In a situation like this, the market profile histogram is very thin. You can see that the histogram is very thin in this area. The reason is that the strong buyers that were pushing the price higher right there, they didn't really have much time to put any volumes in there because the movement was so quick. So for that reason, the profile for this area is so thin. Now let me show you the second trading setup, the aggressive initiation setup. I look for this particular setup when I see that there is a trend day or a strong and aggressive move, like in the picture. So this is a very strong and aggressive move. Then I look for a volume cluster that was created within the aggressive move area. At this picture there isn't any apparent volume cluster, but if there was, it would look, for example, like that. This would be a volume cluster, meaning that some volumes, heavier volumes that are there or there, well placed in the market in this area. So this is how a volume cluster in a single print would look like. And in my setup number 2, which I use in a trend day or in aggressive movement like that, I look for a pullback to this area. In this case, I would go long from there, from this pullback. The reason is that I think that in this strong buying activity, strong and aggressive buyers that were pushing the price higher were adding very aggressively volumes in this area, right where the volume cluster is. For that reason, when the price comes back to this area, those strong buyers that were aggressively pushing the price higher and adding to their positions right there, so at the highest peak of this volume cluster, there is a strong support zone, and those buyers that were pushing the price higher will probably become very aggressive, and they will defend their buying positions and push the price higher if it comes back to this area. Let's have a look at some examples of those aggressive initiation areas now. So here I marked three most significant aggressive initiation areas or single prints. This is basically what I look for when analyzing a chart. In this particular case, there aren't any viable levels to trade using my second trading setup I just shown you, because there are no volume clusters in the single print, but we will get to those later. Still, those areas give me valuable information which side of the market is more aggressive, whether the buyers or the sellers. Right there you can see very aggressive buyers pushing the price higher. A second single print also shows very significant and strong buyers, and the third aggressive initiation move indicates some aggressive sellers right there. So this was the second significant piece of information that I look for when analyzing the markets. Now I'd like to move on to the third and the last significant information I look for. Maybe if you guys have any questions about that.
Dale, I'll just jump on here real quick. Things are, as far as questions go, guys, I am answering questions as you type them in, and if there's anything that I need to relay to you, Dale, I will just, I will do so. But it looks like right now I'm pretty much getting all the questions answered, so I think you're good to go, and if there's anything I need to refer to, I'll pop back on the mic again.
Right, cool. So let's move to the third setup, to the first significant piece of information. It is a strong rejection of either higher or lower prices. If you look at the picture at the price action, it could look, for example, like a pin bar, but not necessarily. What I want to see is just aggressive rejection. I don't pay much attention to the candle pattern or to time frame. What matters to me is price making a sudden and strong reversal. For example, like there in the picture, this is a strong rejection of lower prices, strong reversal. If I see such a thing, it gives me information of strong buyers or strong sellers aggressively defending their positions. In this case, it's strong buyers defending their positions and rejecting lower prices. Significant place in a strong rejection area is a volume cluster that was created in this rejection. So it would be this volume cluster. Right there, there is the highest point of the volume cluster. Such a volume cluster is created by aggressive buyers. In this case, it's aggressive buyers that placed massive volumes in the market in order to change its direction. So this is a very significant piece of information. My third trading setup is based on this information. So if I see a strong rejection like that, I look for a volume cluster in this rejection. So for example, like in this screenshot, there is a volume cluster created right there in this rejection. And when there is a pullback to this area, in this case, I would go long, exactly from the highest point of the volume cluster. So I hope this is clear, and let's have a look at a few examples of what I consider a strong rejection. In this picture you can see three pretty strong rejections. One rejection of lower prices right there, and two strong rejections of higher prices. You can notice that there isn't any particular repeating candle pattern in those rejections, but still all three are pretty clear ones. If you look at the first market profile, you can see that the volume clusters are right there and right there. This volume cluster was created during this rejection. The higher volume cluster was created during this rejection. If I wanted to trade my third trading setup, the strong rejection setup, I would wait for a pullback to this area and go long from there, from the highest point of this volume cluster. So there would be a long trade from there. There is also a possible short from this area, from the highest peak of the volume cluster. So this is the application of my third trading setup. Now I'd like to show you a picture where all the three most significant information or patterns that I look for are in one chart. This is basically what I see when I look at a chart. First, I look where significant volume accumulation areas are. And those are marked in yellow. Those are the most significant volume areas in this screenshot. Those ones. Then I look for aggressive initiation areas. Those are the green ones. Those are the most significant initiation areas. Finally, I look for strong rejections. Those are the pink ones. Those are the strongest rejections in this chart. Now, when I put all this together, I have a pretty clear picture of what is going on in the market, and I can finally start making my own trading levels using the 3 trading setups I've been showing you in the previous slides. Now, those screenshots I've been showing you were mostly just illustrations, so I think that it would be best for you to see some real application on real trades that I took. But before that, let me do a brief summary, very brief summary of all the 3 trading setups I've been showing you. I would really like you to be familiar with them. A very quick summary of the first setup, the volume accumulation setup. Let's just imagine that this is price action, this is sideways price action, this is aggressive buying activity. Volume profile for this area would look something like that, with a point of control right there. This is the market profile with point of control right there. And in the setup number 1, I wait for a pullback to this area where the volumes were the heaviest in this sideways price action. So at this level, I would enter a long trade from there. So this is the setup number 1, the volume accumulation setup. I hope it's clear enough. And we can move to the second one. This is the aggressive initiation setup. I use this setup when there is a strong trend or strong buying activity or aggressive buying activity. Basically, when there is a trend or when there is a strong movement like that. So let's imagine again that this is a price chart, and the volume, the market profile for this area would look like that. It would be very thin with the volume cluster right there. The highest point of the volume cluster is here. In this case, I look for a pullback to this area, so I wait for price to come back to this area and go long from the highest point of the volume cluster. So in this case, it would be a long trade from there. So this is the summary of my second setup, the aggressive initiation setup. Let's have a look at the third setup, the strong rejection setup. I use this setup when there is a strong rejection of either higher or lower prices, which looks, for example, like that. Let's say this is a rejection of higher prices. Volume profile for this area probably look like that. And let's say that there is a volume cluster in this area. In this case, I would wait for a pullback to this price level, to the highest point of this volume cluster. I would go short from this area. I hope that it was clear enough. I think that we can move finally to the real trade examples. If you don't have any questions, of course, regarding the setups or anything else.
I'm marking down any of the questions, Dale, so what we'll do is if there's any questions I feel like need to go to you, I'm just writing those down, and when you get through with all of it, I will go ahead and relay those questions to you. So just let's finish up with the third one, and then I'll write down any questions.
Yeah, all right. So those levels and trades that I'm going to show you now were published on my website in my Pro-Forex course. I took all of those trades along with my members. All of those trades are real trades that we took. I'm going to show you 2 real trade examples of each of the 3 setups I showed you before. So there will be 2 real trades based on volume accumulation setup. There will be 2 real trades based on aggressive initiation setup and 2 real trades based on a strong rejection setup. So let's get to it. This is the first real trade based on the accumulation setup. You can see the volume accumulation took place right there in this area. In this sideways price action, those heavy volumes were accumulated. After that, there was a strong selling activity indicating that those volumes were probably and most likely volumes of strong sellers. So in this case, I just waited for a pullback to this area and went short right from there, from the heaviest point of this volume accumulation. So this is the real trade number one that I took based on volume accumulation setup. There is one more real trade for the volume accumulation setup that we took. In this case, you can see that there was a sideways price action right there, and in this sideways price action, those heavy volumes were accumulated. The heaviest volumes were accumulated right there in this area. After that, there was a strong selling activity indicating that those volumes were most likely volumes of strong sellers. So in this case, I also waited for a pullback to this area and I went short from there. Right, I hope this is clear, and we can move to the setup number two with another real trade. In this picture, you can see very strong buying activity right there, very aggressive buying activity. And in such a case, I use my setup number two, the aggressive initiation setup. As I said, in a case like that, I look for a volume cluster. So for example, volume cluster like this one. You can see right there, there is the heaviest volumes in this volume cluster were created right there, were accumulated. And in this case, I waited 7 days for a pullback to this area. I went long when the price came right there at this place. So you can see that the levels work even if they are 7 days old. They work even if they are 1 month old. And surprisingly, even very old intraday levels work very nice. Sometimes the older one, the better one, I would say. And let's have a look at the real trade number 4, again based on aggressive initiation setup. In this case, you can see that there was a strong selling activity, and for that reason, I wanted to trade the second setup, the aggressive initiation setup. So you can see two pretty significant volume clusters. First is right there. So I waited for a pullback to this area. Unfortunately, my selling order didn't get filled. The price turned, I think it was a half a pip or 1 pip sooner. So I discarded that level. I didn't trade it anymore. And I waited for the second level, the higher level, created by this volume cluster. And I waited at this price. I waited for a pullback. Even though this short trade was against very strong buying activity, there was a reaction and I was able to take a full 10 pip profit from this reaction. So this was the real trade number 4 based on the aggressive initiation setup. Real trade number 5 is based on strong rejection setup. You can see the strong rejection right there. Very strong and very aggressive rejection of lower prices. This indicates very strong and aggressive buyers. And I think that those buyers were most aggressive right there at this volume cluster, and at this place they placed most of their volumes in the market right there. So for this reason I waited for a pullback and went long from this area. You can see that the reaction was pretty sweet, pretty fast. Real trade number 6, this is the last one, also based on a strong rejection setup. You can see the strong rejection right there. Again, strong rejection of lower prices. And in case like that, I look for volume cluster, which is right there. And the heaviest point of the volume cluster right there. So I just waited for a pullback to this area. I entered my long position from there. So those were the real trades based on the 3 setups I've been showing you. So I hope this was clear enough. Right now, I would like to show you my current trading levels. So those are the current trading levels I published around 1 or 2 hours back in my client section. You can see I have 2 long. There are columns for 2 long trades and 2 short trades. I don't have any long levels for euro dollar, nor do I have any short levels for euro dollar, but I have two long levels for Australian dollar, US dollar, two trades for US dollar, Canadian dollar, and US dollar, Japanese yen. Now I'd like to show you the reasoning behind each one of those levels. So this is a trading view chart, and this is euro dollar. I don't have any trades right now. I don't have any levels that I like to trade right now. But let me show you very quickly the trades that I took today. The first trade was a long trade from 1.1444. It was a long trade, and it was based on the setup number 2 I've been showing you. The setup number 2 is based on strong buying activity and volume cluster within this activity. So I went long from this area. It was very nice and quick profits right there. The second trade, I didn't take that trade because it was during significant macroeconomic news. It was, I think it was during Yellen's speech today, or the Yellen's testimony today. This was also based on setup number 2, based on this volume cluster. So I got a long level right there at 1.1429. If you have a look, there was a very nice sharp reaction to that level right there. But unfortunately, I didn't take that level because I don't trade during the news. So those were trades that I took, or trade that I took today on the euro dollar. Right now, I don't have any levels on the euro dollar. So let's have a look at the Australian dollar, US dollar. Two levels there. I have two viable long levels. The first long level is based on setup number 1 on the volume accumulation setup. The long level is at 76.52, and you can see in this sideways price action, those volumes were accumulated, very heavy volumes were accumulated in this area. After that, there was a strong buying activity, indicating strong and aggressive buyers were accumulating their positions right there at this volume. So if there is a pullback to this area, I would go long exactly from this place, from the place where the volumes were the highest. First trade I like to take. Second level that I like to trade is at 76.23. It's based on setup number 2, the aggressive initiation setup. You can see right there was a strong buying activity, and within this activity, this volume cluster was created. This volume cluster indicates that at this place, strong buyers were adding to their positions and pushing the price higher. Another thing that I like about this level is that it worked as a strong resistance zone, and when the price blew past that level, it became a strong support zone. So for those two reasons, I very like this long level. I think that we can move to the US dollar, Canadian dollar. There was a very aggressive movement today, and I'm really glad because of that, because I can show you a very nice example of the setup number 2. As I said, I trade the setup number 2 when there is a strong buying or selling activity, strong sellers or strong buyers. In this case, today there were extremely strong sellers, and within this selling activity, this extremely strong significant volume cluster was created right there in this area. So I'll just wait for a pullback and go short right from there. This trade is based on setup number 2. There is also one level. It's a short level at 29.21, and it's based on setup number 1 on the volume accumulation setup. You can see that in this very long sideways price action, those volumes were accumulated. On the right side of the chart, you can see cumulative profile for this area, and you can see that extremely heavy volumes were accumulated in this area. After that, there was a strong selling activity indicating extremely aggressive sellers. If the price makes a pullback to this area, I'll be waiting with my selling order, and I start selling right there from 29.21. The last market is US dollar Japanese yen. Oh, and I don't have a, oh, I do have a trade there. It's right there. This is, yeah, let me show you today's trade. I took a short there today. It was based on setup number 2, the aggressive initiation setup. You can see that there was a strong selling activity, and within this activity, this volume cluster was created. Then the price was slightly below that volume cluster, and when there was a pullback, I went short in the beginning of Asian session. So this was my today's short at US dollar Japanese yen, and let me show you my long level that is at 112.54. You can see that it's very old level. I think it's 9 or 10 days old level, and this level is based on setup number 2. You can see that there was a very strong buying activity right there, and within this activity, this significant volume cluster was created right there in this sideways price action. So I'm waiting 10 days, and I will be waiting even more probably for a pullback to this area. And when there is a pullback to this area, I believe that those strong buyers that were pushing the price higher and adding to their buying positions right there will become aggressive and push the price higher. So guys, those are my current intraday levels. We are almost at the end of the webinar. So if I got you interested in a market profile and in my style of trading, I would be really glad if you would visit my website at traderdale.com. If you allow me, I would show you very quickly what you can find there. So at my webpage, I publish articles. Those articles are about market profile, price action, trade management, or backtesting, trading psychology, and also I publish my monthly statistics there. You can also watch some of my older daily levels commentary videos there. And there is also a recent trade section where I publish some of my recent trades along with a brief commentary how I traded those trades. Now you can join me and my members in my Pro Forex course, and in this course I publish my daily levels twice a day. You can see the table of Forex trades and futures trades. There is also a screenshot of my current levels. This is old screenshot. As I said before, I also shoot a daily levels commentary video. I do it every day, and in this video I comment on every level from this table. This video serves as an educational material so my members can see how exactly I pick my levels, and they can learn and ultimately pick their levels themselves. So this is my goal, to teach my members to pick their levels themselves. I also publish swing trade levels for 15 forex pairs once a month, and I also shoot a swing video commentary, which is essentially very similar to my daily levels commentary videos, with the only difference that this video covers just swing trades. My members also have access to extensive video course that was kindly made by Sterling, and here you can see some topics that this video course covers. So there is video for level selection, trade entry, initial stop loss and take profit, video on trade management, on alternative trading approach, expert advisor setup. I have my own expert advisor to trade my levels, a very cool thing. Also, there is a video for trading view setup, and Sterling's already working on some more videos for this course, so there will be more and more videos in his video course. Along with that, my members also get access to my download section. There they can download my favorite tool, Market Profile for MetaTrader, along with other very useful stuff. Now, when we finish, I hope that we'll be able to send you an email with this Market Profile for MetaTrader. So you will have that tool and you can try trading with that. I also have a members forum. I really like that place. People are so nice and helping there. You can discuss the trades there or ask anything, and you can be sure that there will be people to help you, including me, of course. I'm also active at this forum. Now, Sterling asked me if I could do a special offer or a special discount for you today. So I decided it would be a cool thing to do. So I have a discount for you today. What I'm offering is a 6-month membership in my Pro Forex course for $397. Normal price for this would be almost 600. So I'm offering you basically a 33% discount on the course. The reason for giving you a discount for a 6-month period is that I would really like you to learn my style of trading, and I would like you to learn how to pick your own levels using market profile. You know that learning takes time. It's the same for trading and for the other professions. Trading is an exception, so you need time to master trading, and for that reason I think that 6-month period is really the best option there. If you would like to take up my offer, I think that Sterling has a link for you for this special offer. So maybe in the end of the webinar or right now, Sterling will be able to give you this link for this discount. Yeah, I would like to thank everybody for attending, for staying to the end, and for really great questions.
And again, any questions you have, you're always welcome to email either of us and get back with us, and I hope to see you on the member side of traderdale.com. You'll see me over there as well. I'm going to start being maybe a little more active over there myself. Again, I appreciate you guys being at the webinar. Hope you found it useful, and I will see you guys later. Have a good one.